Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick. He's a natural resource analyst for EdelSonInstitute.com and also Weiss Research. Welcome back to the show, Sean.
Hi, thanks for having me on.
They call it Dr. Copper because so often it takes the temperature of the markets and what's happening with our economy. Copper trading almost at $3. I remember in recent history it was around $2.04.
Yeah, and this really caught the market by surprise. It isn't just copper. I mean, we can talk specifically about copper, but we also have palladium at a 16-year high. We have zinc higher. We have iron just soaring, and it's all related basically to China. They are having a big infrastructure build-out, and they need all kinds of metal for that. And so basically that hungry tiger is just taking all the metal we can shove in its mouth. Now, longer term, there are other forces at play. For example, electric cars, they require a lot more copper than a ordinary internal combustion engine car. It's not that copper is used in the electric batteries. They aren't. But it's all the wiring. You need about 3 times as much copper for an electric car as you do for a regular car. So you can see forces both shorter term, that is the big infrastructure build out, and longer term, which is electric vehicles. So that's why people are willing to make these bets now, because they see both short and long term things look very good for copper, they look good for aluminum, they look good for pretty much most of the industrial metals.
And so China, although some people have said their economy is slowing down, they predicted a year ago that it would grow at 6.7%. And every quarter, they say it grew 6.7%. Maybe for once they're telling us the truth.
Maybe, and people were saying things were slowing down. They were saying that the rate of growth was slowing down. That is a subtle difference, but you'll have to give it to me, because they're still growing pretty strong. And, whether it's a wobble up one way or else maybe a wobble down, doesn't matter in the big picture. In the big picture, they need more metal.
And they're busy building that one belt, one road so that they can trade with Europe?
Yeah, lots of head scratching about that. Is it just a hole in the earth into which they're pouring money, or is it actually going to work out? The jury's still out. It sounds like a good idea, though, and there are trains running in Germany now because of the schedules that the Chinese want them to keep. So, it seems like a smart idea, and so we'll see how things go there. But they're using all sorts of commodities. Oil demand in China keeps going up, and other stuff like that. So it's like all kinds of stuff. Now, is this being built on debt? Maybe it is, but they've been pretty successful at it so far, managing the whole thing. So I would actually say that it's a good news situation for the global economy, and or at least on the harder asset side. And this looks pretty good, I think.
Well, this might be a stale, dated stat, but the Chinese were buying cars at 50,000 a day. I mean, for all of Canada, that might be a year's worth or something. I'm not sure about the numbers, but an incredible number of cars are bought every day, and you have to have government permission to buy one. You probably have to make sure you have a parking space for it. I know in Tokyo you can't buy a car unless you can prove you have a parking space.
Well, in China, the ones you need permission for are internal combustion engines. If you're buying an electric car, that's a different matter. Some cities maybe still require special permits for that. But generally, it's easier to get those. But going back to internal combustion engines, the rise in Chinese demand for palladium alone has boosted the demand globally for palladium by 4% this year. So that's huge. That's why palladium is hitting a 16-year high. It's really because of Chinese demand.
Yes, they've found out catalytic converters really are worth the price.
If you don't want to have air that you can put on a plate, yeah.
Yeah, air so chunky you'll be tempted to breathe it with a fork. Yeah,
right, exactly.
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're talking with Sean Brodrick. Sean, what do you see happening with gold?
Well, we are seeing gold knock up against that $1,300 level. And it turned back lower. It's down to $1,290 as you and I speak about this. However, I'm looking at a chart of the miners. And the miners, and I'm using the GDX here. You can use whatever index you want. But the miners have broken their larger term downtrend. That looks pretty positive to me. And I expect that we could see the miners lead the metal higher. Now, when we saw a breakout last Friday, many people got excited, and then gold turned right back around, and that dashed people's hopes. These things never go as easily as one might hope. It takes some time. But we are seeing a supply-demand squeeze around the world. India, had enormous demand in the last month. And then on the supply side, the new mines just aren't coming online, or at least not in any way to really make up for the ones that are really being used up. So it's an old-fashioned global supply-demand squeeze. It looks like pressures are moving higher, and a lot of investors, I believe, are underinvested in gold. They thought things were okay, but then you have, crazy stuff one week where we might have a face down with North Korea, and then you have crazy stuff the next week where suddenly all the sabers are rattling in Pakistan and India and stuff like that. And that really scares people. Then you have the global financial system, and God knows if that thing's going to ever be worked out. It seems that they're removing the regulations that they put in place after the last collapse. They're saying, oh, we don't need those anymore. It's the same idiots running things. Of course you need those regulations. And so with those being removed, it'll be, yes, easier for them to make money. It'll also be easier for them to go broke in a big way. And so that's the thing I think that gets people worried and rattled. Not so much the horrible attacks we've had in Spain and stuff like that. Those are horrible. I don't think those influence the market that much. Instead, it's the fears about the global financial system. It's just looking at the global supply-demand picture. And we're starting to see a little hint of inflation, and that kind of gets people thinking, maybe I should be proactive about that as well. So you put those things together, and that's what really has been moving gold. Yes, it pulled back, but the miners are indicating that it will go higher. We just have to push through the level that we have gold at now, through that 1,300 level, because the miners have already broken their downtrend, and they look like they're ready to go higher.
Is there any way for a person to know if they're getting into a good mining stock, or do you just buy the ETF?
Well, it depends on how much research you want to do. There's many, many ways to know. I look for ones with blue sky. In other words, they they have found something, but there's a lot more for them to find. People can see that. I also like companies that have a preliminary economic assessment, so we know what the mining costs will be, and it isn't going to be that expensive for them to get the gold, or at least not expensive to what they're going to get the gold for, and certainly see how like that works out. And also, of course, success breeds success. If you have a team that had success in a previous company, they're much more likely to have success in another company. These are the kind of things I look for. There's actually a lot more than that. You also want ones that aren't supporting themselves by constantly issuing stock. You like those companies that have a good enough relationship with the financial community that like they can get money when they need to without having to mortgage their eye teeth. There's things like that, but it takes research. And so if you aren't comfortable doing the research, then either get someone's advice or just buy the index. You won't make as much money. You won't have those, big, huge, I made 3 times my money plays to brag about, but you'll still be riding the trend, and, that works for most people.
What's going on with oil?
Oh, well, isn't that a great question? I mean, the news out of OPEC's getting more and more bearish. Everybody's cheating, new supply comes online, and all this stuff. And yet, at the same time, I mean, prices have been amazingly resilient. I thought, for a while we might go down and retest the 42 area, but that did not happen. Instead, things turn around, things are heading higher. I've talked to some smart people that say that the price of oil should be $10 higher than it is now, except that everybody's so negative on it right now. So it's hard for the bulls to actually put anything together. So if the sentiment shifts, then you could see higher oil prices in a hurry. But certainly this hasn't translated to most of the oil stocks. Most of the oil stocks are still in the basement. So if you're bargain hunting, that might be something you want to look at. If you are looking at a company which is extremely well run, it keeps increasing its output quarter after quarter, that kind of thing, that might be something to look for. If you're more of a income-oriented a person, you can get some amazing dividends right now. That doesn't hurt, So there are some things you can look at in the oil space. Certainly the action in oil itself, despite the news we've been hearing out of OPEC and stuff, it's acting pretty well for the bad news, and that's usually a sign that things are actually going to go higher.
And U.S. oil inventories have been falling a lot faster than they expected.
Well, yeah. Now, part of that really is the exports, right? I mean, we are becoming an exporter to the world, and also we're importing a lot less. I just saw this morning that the amount of oil from Saudi Arabia that's imported into Texas has dropped by 1/3 in the past year. So we're importing less, exporting a lot more, and so, it's nice to move into that role as an energy power and have more control over our own energy destiny. And so that's good, too.
We'll have more with Sean Brodrick right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're chatting with Sean Brodrick. Sean, the Canadian dollar again is tickling close to the 80-cent U.S. mark. Is that because the Canadian dollar is getting stronger or the U.S. dollar weaker?
Well, the U.S. dollar has been weak for a long, long time. I mean, since the start of the year, it's lost about 8%. However, it looks like the U.S. dollar is actually starting to find support now. So it's not because the dollar is getting weaker, at least not right now. I mean, earlier this year, yes, I would say that we saw your dollar go up because ours was going down. Now it seems to be a different thing. I have to think the strength in the metal space is really helping the Canadian dollar. I mean, all those industrial metals, you actually produce a lot of them up there. And again, we are seeing strength in oil that, despite the bad news out of OPEC, it's actually pretty good. So if you look at the harder commodities, Canada's in a pretty good space. I think that's what's happening with your currency, and I expect that to continue.
So maybe we're going to be judged on more than just the price of oil.
Yes, and more than just a pretty face, absolutely.
How could the position of the U.S. dollar affect earnings on the Standard & Poor Index?
Well, interesting thing about that is so many of the S&P 500 companies sell stuff overseas. As the U.S. dollar gets cheaper, they're able to sell a lot more. In fact, the falling U.S. dollar in the first half of the year was a major source of improving S&P 500 earnings. Now that the U.S. dollar seems to have found a bottom, we won't see earnings increase as much. That doesn't mean earnings have to go down, but the rate of increase won't be as good as it was in the first half of the year. And I think that could actually weigh on the major indices, especially things like big tech, simply because, when you look at, say, the QQQs, which is the NASDAQ 100, that was up like 20% so far this year. That's a big move, considering that earnings only went up 14%. So I think there's some air in there, and I think a lot depends on two things that are happening here in the U.S., and I'm sorry that my country holds the rest of North America hostage on so many things, but here we go. All right, first we have the fight over raising the debt ceiling in the U.S., which should never have been a fight anyway, and it might not be, except that there seems to be some disconnect between the White House and Congress, and so that actually might be a battle. And if it is, then you could start to see people get worried about that and how that will affect our long-term credit rating and stuff like that, and so we could see volatility in the U.S. dollar and bonds and stocks around that. Beyond that, though, we have the good news. The good news being that right now, or at least soon, they will actually be working on a new corporate tax cut and potentially repatriation of like all these profits that are held in overseas banks by U.S. companies. There's a long, complex story that I won't get into about why those are there, but the reason they won't bring them back is because they have to bring them back at the current corporate tax rate. One of the platforms that President Trump ran on was allowing that money to come back at a 10% tax rate. So, if that happens, that is good earnings news for all those companies that have money stashed overseas. And so, we'll have to see how they walk that line. They do not want the U.S. debt and the deficit to actually head up that much higher, and they just expanded the war in Afghanistan, which is great news for defense stocks, by the way. If you're looking for something to profit off that, definitely good news for defense stocks. But what's that mean? That means we'll be spending more money on that. And we also want to have a corporate tax cut. So what will that be? Because they don't want the debt to get too big. They don't want, all the stuff to just balloon out of control. And so there might not be as big of a tax cut as people were hoping, and there might not be as much repatriation as people were hoping. So we'll have to see if all that has already been priced into the stock market, if the good news has been priced in, and if people get disappointed when the actual results actually come out. And so what all this boils down to is volatility. We could probably see some volatility in September and October that could be quite the teeth wobbler, as you might say. When the U.S. Congress gets back from recess, they're on recess right now, they'll have about 16 working days to actually put together raising the debt ceiling. That's not impossible, but you could see some down-to-the-wire stuff on that. And then after that, they'll do the tax cuts. And so you have the bad news on one hand, the good news on the other. Is the good news priced in? We don't know. So just expect volatility over the next 2 months. It could be quite exciting. Oh, and there's one more piece of excitement that I haven't mentioned yet.
Well, go ahead and tell us.
All right. I will be at the Metals Investor Forum, which is in Vancouver on September 15th. And we'll be profiling all sorts of great small-cap miners and other small-cap companies that people probably haven't heard of, but they should hear about them. Great companies. I went there for the first time last time and was just blown away by the quality of the companies at that thing. And so I'm expecting another great time when I head there this year. So September 15th, keep an eye out for that. If you have a chance to attend, I don't know what the attendance fee is. That is something, if you like the small cap space, if you like miners and stuff like that, you should definitely look at it September 15th.
Sean, thank you so much for chatting with us.
Thank you. I had a great time.
My guest has been Sean Brodrick. He's a natural resource analyst at EdelsonInstitute.com. Also check out his other web pages, newgoldbull.com and Red Hot Resource Millionaire and Marijuana Millionaire. You're listening to HowStreet.com radio. If you have any questions for our guests or the show, you can email us at info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.